Good morning, guys. Hope everybody's well. Today is March 7th, Thursday. It's a fabulous day here in Austin. That's where I am for the next week, for about another 7 days. And things are going well. Market overall, let's talk about the market a little bit. Three things I wanted to note. First thing is the amount of negative news on Google seems a little bit overdone. So I'm expecting a technical bounce somewhere in the 130, 131 kind of a range, maybe a little bit lower, maybe the 126, but not more than that. This is too strong a stock. Just to give you context, Meta, which is Facebook, is at 35 times earnings, growing at about 8 to 10%. And Google is at 22 times, growing at maybe a little bit less, but not that much more lesser than Meta is. And yes, there is a lot of news, some of it very valid about Gemini and also about Google's AI plans and dominance, but still, Google is a good stock. I think this may be a little bit overdone, maybe a good opportunity to buy Google at this point. And you never know. Maybe that suddenly they get a news of Sundar Pichai leaving and replaced by somebody else, and that might turn out to be the stock being, Satya Nadella kind of a moment for the stock. But Google is an interesting stock to watch. Apple, I'm not so bullish on for 2024. The China news is still very, very difficult to be able to break through, given that Apple, China makes up 23% to 27% in that range for software, for hardware and services, and that is being replaced consistently and very, very constantly by the Xiaomi new products that Xiaomi and also Huawei have been bidding out. So I think that's going to be a challenge. Huawei especially has been doing very well in gaining share against Apple in China. So Apple, I'm not very, very bullish about in 2024. And Tesla, I think there's a little bit more room for it to go down, but it's going to bounce at some point in time. Those are the big three that in my mind a lot of people ask questions about. Okay, today one of the stocks that showed up on the radar screen was Samsara IoT. They announce earnings later today. I wanted to talk a little bit about the company itself, what they do, how they do it, and talk a little bit about also the fact that they're a software company that a lot of people don't seem to know about. They're small, relatively speaking, $18 billion or so in market cap. Compared to some of the bigger companies, they're much, much smaller, but they're in a unique position with the Internet of Things opportunity that they have ahead of them. They've started with trucks, and I think they have an opportunity to go beyond trucks as well. So let's take a look at Samsara IoT today. Samsara actually was founded by folks that actually had been very, very strong founders before as part of selling Meraki to Cisco, I think. So yeah, Cisco. And they've done a very good job after that to be able to build this company. 2012 is when they started, really grown very well after that. And they went public in 2021. Took a little bit of a deep breath after they went public, took a little bit for the move downwards, but now they seem to be in the right spot to be able to grow from here. So I'm really excited about this company itself. So what do they do? Um, Essentially, Samsara provides a Internet of Things solution. So the first product that Samsara built is a box. That box connects by means of sensors and wires and cables to your truck. So let's say you're a fleet owner, for example, UPS, or you are Walmart, which owns a fleet as well, or any number of truckers. Now, they have drivers who drive the car and they want to be able to get information from those trucks on safety. They want to be able to get information from those trucks on handling. They want to be able to get information from the trucks on efficiency. That information, by placing that box in the truck, connecting it to the truck itself with the sensors that exist in that box, Samsara is able to collect all that data. They also have ability to connect information from cameras and from video recordings and the telematics, which is sensors that I talked about, that allows the company to be able to understand better how that truck, that driver is performing, how are they doing, and gives them much better visibility to optimize how that truck can perform. So that's where their platform started with. That's the first step, being able to collect telematics, but they sell a software platform that allows you to be able to get visibility and a single dashboard across the place. And because of that, they have now taken the direction to be able to look at all of the field sales workers, fields people who are actually out there doing the work and connecting them via telematics and sensors to be able to see how they can perform better, be more efficient. So you have at the bottom of the layer, you have a lot of different sensors from a lot of different companies, whether they are partners which Samsara operates with, Bosch, and a whole bunch of others, such as Honeywell. There are fleet information data, truck providers themselves, insurance companies to see who was maybe at fault or whether the driver was driving not so well. And also within the workforce, in the office itself, in the plant, in the warehouse, collect all this data. They have an analytics layer on top of that, along with the ability to be able to use that much of data for artificial intelligence, machine learning, if you will. And then above that, they give you tools and also dashboards and workflows to be able to automate. And the applications that they have gives you a driver experience, gives you a field experience, gives you applications that they built and third-party people can also build. For example, if your company wants to be able to build on top of the data, they can do that as well. So that's the Samsara Connected Cloud Operations platform, if you will. Now, they started with initially, as I mentioned, just to be able to make drivers more efficient. When you have drivers doing long haul routes, whether it's LTL or full truckload, they wanted to make sure that the drivers were attentive. They were monitoring the drivers to see and provide assistance to them to let them know if they were falling sleepy. Then they started making more efficiency optimizations on the equipment itself, whether it's a truck, whether it's a small truck, whether it's other equipment that exists, and being able to understand how to make sure that they can do a better job of using that asset more effectively. Then they went on from equipment and vehicles to actual locations and sites, which is how can we make sure that every one of these people are actually at the right location at the right time, doing the right work, both from a safety perspective, but also from an efficiency perspective. And now they give a lot of applications such as time reporting, workforce management on the workforce itself. So this is for people that are actually on your actual physical site. Now, here's an example of a customer. They initially went to the customer, all they wanted was just vehicle telematics, right? When you're driving down the car, when you're driving the truck, sorry, you want to be able to collect information from the truck. How efficiently is it going? Are they going too fast? Are they breaking a lot of rules? Can they do a better job of reducing the amount of money they pay for insurance by being able to drive more safely? And also on the equipment itself within that specific location. Desktop Constructors is one of their customers. Then they said, okay, we're going to move from vehicle equipment and telematics to also video-based safety, which is how do we make sure that people are driving more safely, people are operating more safely within the location itself. And then they expanded that even further to site-level light visibility and applications for workforce to be able to manage their intake, to be able to. So what they've done is they've said, this is the plant, this is the location, this is the manufacturing facility, this is a service location. How can we provide applications on the entire workforce and make sure that they can do it end to end, not just for IoT itself? So that's an expansion of the TAM, if you will. Now, when you look at physical operations, that is people that are actually making sure that they're in location doing specific tasks as opposed to the management of that. There is requirements of safety, there are requirements of efficiency, whether it's energy efficiency or utilization efficiency. There are compliance requirements, there is utilization requirements, and there is maintenance requirements. How do you make sure that you can collect all this information, provide a single dashboard for that company to be able to manage, especially for large sites or even for a single site? Making it more efficient is an ongoing philosophy that a lot of these companies follow. And Samsara is building that system of record, just like, for example, the system of record for your ERP transactions, SAP or Oracle, and the system of record for your CRM is Salesforce. They believe they can also be the system of record for all your physical operational efficiency and equipment. They've innovated consistently. So initially, they started out purely from a safety perspective in 2020. They looked at road scenes and interpreted what the road scene was to be able to give them within the driver, so the truck, the cab in the front, they said, let's give the driver a little bit more information about how safe they could be. They moved that more towards more expansion of the safety itself, distracted driving, for example. Again, making sure that fleets are operating at a much more efficient fashion. Then they started to be able to look at it on a site-wide basis based on matching by color, et cetera, of the clothing itself and saying, okay, these people are maybe not wearing the right equipment, or maybe they don't have enough equipment to be safe. Then they started moving that further towards classifying different locations. How do you make sure that you can say, can we detect if the camera has been moved away so the driver doesn't want them to focus on this for efficiency's sake? So they can detect that as well. Then they've gone to telematics in 2023, which is getting the location. So the box that they provide sits in the truck, collect a lot of data. How fast is the truck going? Is the wear out in the engine oil the right levels? Is the brake fluid in the right levels? All of those, wear and tear of the brakes itself. They collect all that telematics and then provide that information so they can manage an entire fleet. And they also provide information for the driver to make sure that they can always wear their seatbelt, for example. Don't use mobile phone while driving. For trucks, accidents are a big problem. And for fleet owners, accidents cost a lot of money for them, not only from the amount of money to be able to replace that truck, but also from an insurance perspective. So they focus on that area itself, and they want to be able to get into new areas. So they focused on a lot of innovation for the company to be able to make sure that they can do safety, compliance, efficiency, monitoring, and also management. So that's what the Samsara device looks like. It's got a USB port, as you can see, but it's also got a bunch of connectors that connect very easily to your truck or to any other large equipment device. Once it connects, it starts collecting a lot of data. The USB typically tends to be for powering the device itself and collecting that data. This unit that you can see right now actually has connectivity via either 3G or 5G actually right now in some devices. They're going through multiple generations of these devices and sends data remotely to your central location on the cloud. So on the truck itself, it uses camera and detection to be able to give you more information about the driver itself. Are they driving safely? Are they tailgating? Are they going too fast? Are they going too quickly? And you can see from multiple different areas. So it doesn't isn't just getting information from one camera. It actually collects on multiple different locations. So you can test, number one, manage, number two, and also coach the driver on making sure that they can be more efficient, whether it is for safety or there is also fuel and energy. Are you braking too fast? Are you accelerating too quickly? Can you be more fluid efficient with that? Now, remember, if the product gets to the point where it could be for example, trucks right now, a lot of people are expecting trucks to be the first ones that have fully autonomous driving. There are quite a few companies. TuSimple is one. Tesla themselves are looking at FSD within trucks being a very important area for them to be able to innovate. And a few other companies, Mac is working with another one, Peterbilt is working with another company. So as that gets a little bit more automated, there's a need for enough information from these kind of systems as well to make sure that Samsara could actually provide the information to make the fleet more efficient. So it's still the big question for Samsara still is how much more time do they have to be able to go ahead and provide this information from a site-wide basis to the point where if the truck is actually managed, let's say, for example, fully autonomous, will you even need something like a Samsara? I believe you would, because that level of data information provided on top of the system, with an easy integration to that system makes it just a lot more easier for the company. But there are some people who are asking the question, if we get this data from a TuSimple, if you get it from a Tesla, if you get from any of these truck autonomous driving companies, do you even need? I mean, what's the point of safety if the driver in the truck doesn't exist? It's just an automated truck. I don't think that'll ever be the case, at least for the next 10 years, but there are questions about that. Now, what they do is they take all the sensor data, then they will go about location data, video data, digital data, and integrate with third-party systems as well. They take that into a real-time aggregation system. They enrich the data with other compatibility of data across to them, index it, then they provide analytics on top of it, and that their applications or products are, okay, vehicle telematics, how fast is growing, how slow is growing, video-based safety. They have other applications and driver workflows to guide them to the right place, if you will, and give you site-wide visibility. And that is used by multiple different teams. So that's what Samsara does end to end. As an app itself, when the user is working, so they have cameras in multiple locations. We talked about the driver efficiency. They also have cameras in multiple locations. So if you're on a site wide, what does that mean? Is the person going into the track in the right location? If you're working at a concrete plant, are they wearing the right equipment? Are they being able to use the equipment very safely? It gives you that level of data because compliance and lawsuits typically happen by not having this level of information. So Samsara is very good for those kind of companies. They've integrated with a ton of third-party companies, whether it is compliance companies, all the way across. You can see from fuel management companies who want to be more efficient in terms of usage of the fuel, to insurance companies who are actually insuring those trucks, all the way across to OEMs themselves with whom they send and collect that telematics data from Ford or John Deere and other locations as well, and third-party companies such as Slack to be able to provide that data easily, and also workforce management systems such as Kronos. So number one, they have this telematics, they have cameras, they collect all this data, they pipe it through a streaming system, provide analytics and applications on top of it, integrate with third-party data as well. And Samsara essentially is a single platform that gives you safety information, telematics information, equipment information, visibility by means of cameras, and also workforce applications if you want to check in where the person is in a location on top of either Samsara's own device or third-party OEMs that they partner with. Now, this gives them a ton of data. Uh, the 6 trillion, it's obvious that there's a lot of data. Just think about it that way. Whether it's an oil rig, whether it's a tractor, whether it's a farm, they have a ton of data about locations, documents, video, weather. They collect all this information from these multiple locations, and that is useful for certain industries. Construction and field services, for example, wholesale and retail trade, for example, a lot of these different industries that they operate in tend to have a lot of use for this information. They operate both in North America and Europe, and then they're going after some of the mid-market customers as opposed to enterprise alone. Okay, so the infrastructure that they have allows them to be able to build new AI capabilities. That's the big push that a lot of these companies. So two big existential threats are, what if a lot of this becomes autonomous? Now, even if the cars and the trucks become autonomous, looking at the cameras, making sure you can collect the information to be safety and compliant will still exist. But the telematics right now that these companies use becomes very easy for IoT, which is Samsara, to be able to pull that in a single pane of glass. Very, very good usage overall. They give you very quick ROI. The biggest one is just making sure that you can have lower insurance premiums more than the fuel savings. And then they also reduce the accidents and compliance requirements. Insurance is the first one I've heard from a few customers that I've talked to. Insurance goes down if you are able to manage your risk more effectively. And typically the payback period, if you're paying $1 million to Samsara, which is not usually the case, but $100,000, you're getting a payback in about 3 months or so by just lower insurance fees and saving fuel, if you will. Now, this gives them the ability to go after more ROI opportunities. How do you optimize through reporting? How do you generate annual revenue from tracking location itself? And then savings from using alternative energy, for example, or monitoring the temperature to adjust IoT Samsara actually is a platform that serves a lot of different industries. The biggest ones within the transportation industry, construction, waste management, carriers of chemical goods and products as well. The transportation industry is the first one that they started with, but now they operate in a whole host of industries, with transportation industry being the number one, as I said. They are the ones with the most amount of market share that Samsara exists in, and then retail trade. Those are two big industries that we've seen a lot of work with. Now, the products themselves address a fairly large market. So right now, they're about $60 billion in the connected operations market, according to them, both for safety compliance and also for telematics with vehicles, which is using the cameras, detecting what's happening, and then making sure that you get visibility from the truck, from your equipment, and from site-wide locations. And then the apps themselves. I don't think the apps themselves are going to be a big push for IoT for Samsara, but they will start to get bigger and bigger. And they estimate that by 2025, it's actually going to get about almost double that, nearly $80 billion, just growth in the number of companies that want to be able to do this more effectively. And that connected fleet essentially makes the move towards a lot more companies. If you look at what they do, and there are examples of companies, telematics is what everybody uses, and video-based safety is almost what everybody uses. Let's look at what those companies are. Let's look at what the vehicle is doing. Let's make sure that we are driving it efficiently. Can draw insurance, easy ROI. The next one is, how do you make sure that the drivers themselves are driving effectively, or the workers themselves are being more safe? Then you look at equipment, and a lot of companies are using the sensors that exist within these equipments to see if there is need for it to be maintained proactively, or there is a part change. And then finally, site level wide visibility, which is compliance across a location. Those are the use cases across a lot of different companies that they have customers with. Their competitors, Samsara competes with Geotab, Fleet.io. There's quite a few smaller competitors. This is the only one with scale. Samsara is the only one with reasonable amount of scale, and they have a large partnership system. Now, the subscription itself is how they make money. They do sell the box for you. That typically, I don't think, makes a lot of money for them, but they sell you an annual subscription for being able to get access to the dashboards and the applications, and that's what gives them an LTV to CAC of nearly 8 times. So if they spend $1 acquiring a customer, the long-term value of that customer nearly 8 times that. That customer acquisition cost, and the payback period, it is not shown in this graph, but it's about close to about a year is what they said. As they scale, they're getting better leverage. So their operating income has gotten not yet positive, but they're getting to that point fairly quickly, I think. And then free cash flow is also getting to the point where they should be able to start making decent amount of money, from about 71% operating income negative down to only about 12%. And they should get to the point where hopefully they're in the very single digits or no, and actually start making money. The biggest challenge, which you will find, we've been talking about it over the last few days, from Snowflake to GitLab to Palantir and every other company, is shareholder dilution via stock-based compensation. Right now, if you remember yesterday, GitLab was about 4.5%, Snowflake was about 5%. These guys are the same. They're 4.4% equity dilution every year because of giving shares away. And their goal is to get to under 2%. That I think will come just because of the amount of the price of the shares themselves. The valuation of the company gets a lot bigger. So the number of, and there's necessity for them to give a lot more compensation in terms of total stock also reduces. I think that's one of the big parts. So the total compensation, they typically get a salary, a base, a bonus, and equity. The equity portion itself. So just imagine they're giving, and typically the higher up you go in the food chain, CEO, C-level executive suite, you'll make more in equity, much less in your total salary coming from your base and bonus. Okay, Samsara is one of very few companies. The reason why is because you look at CrowdStrike, you look at Cloudflare, companies like those that are operating at about nearly 1 billion plus in annual recurring revenue and about 30% growth. That's very, very rare. It's probably just CrowdStrike, Cloudflare. Snowflake is now projecting next year at 22%. They're not going to be at 30%. Zscaler is getting there at about 30%. Unity is not there. They've gone down as well. And Bill.com is still doing well, which I think should be another thing that I'm going to look at fairly closely. Tomorrow, maybe we look at Bill.com, company that is doing very well. I'm surprised that it's not doing as well on the stock market as it is expected, but I'm sure that they have issues. We'll go through that tomorrow. Samsara is very unique. I really think you should take a look at this from that perspective. So what have they done? They've actually built a large market of existing customers in a lot of locations. Fleet, telematics, and safety by means of visual video is where they started their camera safety based information is where they started their work. Then they've now become the system of record, collecting all this data and enriching the data, providing applications on top of it. And now they have the ability to be able to manage and monitor more information on top of that system. So they believe they can get to at least $5 to $10 billion in revenue by the next 3 to 5 years. That's their growth plan. How do they do that? More applications, more customers. So there are 4 vectors of growth. They get to more customers, they expand more applications within the customers. Number 2, they get to more locations besides Europe and North America. And the other one is AI-based applications that gives them the ability to be able to make their site more efficient, which is a portion of the insurance can actually be savings coming back to IoT. I think one of the things they would probably do very effectively, they could go a lot of different directions. I wouldn't be surprised to see them partner with a lot of insurance companies and say, if you offer the IoT platform, if you do the Samsara platform, we'll actually provide you insurance because we know we can do a better job of it, because that's their number one. And compliance, they could manage compliance insurance as well. They've gotten to about 850 million, now about $1 billion, growing from 100 million to almost $1 billion in, if this is FY24 Q1. So this was just about a quarter ago, growing dramatically. That has just been 10 times in about less than 7 years. This is phenomenal, great growth. The annual recurring revenue growth has slowed down to about 30%, little over 30%, $1 billion, as I said. And the GAAP revenue itself on a quarterly basis, this on the left-hand side is annual recurring. How much are they making on an annualized basis? And then the GAAP recurring on a monthly basis, GAAP revenue on a monthly basis is about $238 million. Provides you a lot of ability to be able to, so if you look at the net new account, this is the annual contract value, ACV, net new. NN is net new annual contract value. They're getting a lot more from existing customers. They're expanding a lot more. 60% of it is going from existing customers, and 40% is just new customers that they are bringing on board. So you look at it on an annualized basis, they started at 2.9 million, $3 million at a customer, and now they're nearly double that in about 3 to 4 years. Getting a lot more customers. $1 million customers have gone up to about 71. 100K plus customers about 1,600. Total customers is roughly about the 2,000 range. And then the ARR mix, if you look at the core number of customers, the 50% of the customers, so they're not a small, medium business play. You're minimum spending about $100,000. Very few customers are spending 5K. That's usually because they just want telematics of any sort. So most of their customers, 50% of their customers are doing 100K plus. 45% of their customers are giving them more than, oh, sorry, I made a mistake. So very few customers are spending actually more than $1 million. A lot of customers spending 100K and about a few customers spending 5 to 100K, smaller fleets, if you will. So they can grow that base very, very quickly. The number of products, as you saw initially, first thing you typically do is telematics and then video, making sure that the driver is being more compliant and being safe. That's where they typically start. And now they're about 90% of the customers, large customers, 100K plus, have more than two products. And a lot of customers actually have more than three products, nearly 50% of their customers. Very predictable revenue. Now, subscription model is about 98% of their business. The rest of the units. Remember, I showed you what the unit looks like. 3 to 5 year subscriptions, very predictable revenue base, very similar to what you would see in a lot of companies. Once you go in with Samsara, you're not getting out. So I don't see this very similar. This is very different than an SMB business like Klaviyo or Intuit, where the churn is very high. There's not that much churn over here. They usually price on two ways. They price for asset, which is what is the machine, what is the location, what is the truck that you're managing, or by headcount. And then they do it primarily by subscription revenues. They don't do perpetual to a large extent. They do it consumption based, and they sell you by the applications themselves. Okay, they're expecting for the next year to be about almost $1 billion. 41% growth is what they had said. Non-GAAP operating margin, hopefully they will get to the point where for the year, they will be at -1%, but for the quarter, they will actually be at 2%. So they'll hopefully get to the EPS range very, very quickly. Roughly about $1 billion, 40%, nearly 40% growth. Adjusted free cash flow is fairly good. Nearly about 2,000 customers overall. And customer growth has been phenomenal, about 50%. Samsara, let's just summarize what we've learned right now. When you are running a fleet, when you're managing operations, the physical, real goods that exist, you need a lot of information to be compliant, to be safe, to make sure that they're working efficiently. To do that, Samsara takes a look at, they look at camera information, they look at video information, and be able to tell you whether drivers are driving very safely or they're doing something wrong, or they're telematics from the vehicle itself to tell you how efficiently the truck is running, whether it's going too fast, too slowly. That information is used either for safety and training. It can also be used for lowering your insurance costs, and also gives you site-wide visibility, which workers are working efficiently versus not, which workers are being more safe versus not. That overall reduces your cost of insurance. That's the first side, but they have a lot of other value propositions as well. But the first one is better visibility, lowering the cost, and managing your workforce and your value more effectively to the different things that you provide. So that's the first part. The second part is they are in software as a service company to most part. They have a subscription revenue that they provide via the dashboard. It is usually as a pricing managed by number of assets and number of people, or for example, drivers in many cases, or even other workers in many cases that are being managed by the Samsara IoT platform. Doing about $1 billion, growing at nearly 40% ARR, going to turn fast free cash flow positive, or turning free cash flow positive, and might get to a net margin by next year timeframe. That's Samsara IoT. Good stock. Now let's look at our 5-step analysis. So let's stop this and let me go back here. I'm going to share. There you go. Let me see if I got that right. Okay, so you can see right now. Let's go to the annualized revenue. We always start with the fundamentals. That's how I started with, at least. I think that's an easy place to start. Okay, an annualized basis. We talked a little bit about it. $100 million in 2018. $800 million trailing 12 months. So 6 times growth in just 4 years. Phenomenal growth. 100%, 70%, 50%, and now going down to 40% or 30%, high 30s, 40%. Decent margins. If you see, gross margins are in the 70, 80% range. No net income for the last few years to speak of. On a quarterly basis, 237 million in revenue, nearly about 60, 70% in gross margins, and no net margins even now. So they're hoping to get there. This was the most, they're going to announce earnings today, remember, after the close of the market. So this will be interesting to see overall how they do. But I should expect them to continue their growth upwards and guide. So they did 39%. They probably guide a little bit lower. They probably do about 30%, 35%, excuse me, for this year. So last Q4, they did 186 million. The estimate for revenue, I think, is about 240 million, 242 million, or 250 million, something like that. That will give them almost about 35% growth. That's the growth expectation for today's earnings report. Balance sheet, total assets, roughly about 800 million in current assets and debt of about 100 million. Manageable, very manageable. Cash flow, barely making some cash flow from operations, even though they're software subscription service company, they're still making very little in cash flow, which is surprising. And even though they have 3 to 5 year prepaid, I don't know if it's prepaid. I think I've got to find that out. But 3 to 5 year contracts is pretty good. 21 times still high for a company, but 40% growth, man, that's very good. 70%, 75% gross margins, negative 20%. If they start turning the profit and still keep that 40% growth, this will be in very, very rarefied territory. Today's earnings should be very good. I'm looking forward to where Samsara would be in terms of overall earnings. Now let's go to the technical side. Oh, this is a beautiful, I just drew this, I think, before this, but just look at this. This is a beautiful bull flag. So I draw that flag. Very nice flag. Let's move that out to here. And there you go. That's the flag. Beautifully going up. Let me see if I can draw this a little bit better. Yeah, beautiful flag. So this is poised to move up. This is not, so this is a stock. If you look at this, this was stage one, stage three, stage four, just absolute cratering, and then consolidation stage. Very nice here. About here is when they said, okay, we're going to consolidate, built a nice base that was in the 23 timeframe about a year ago, $19, and now they're sitting very pretty nearly double that at $33, with the high being in the $36 range. They're going to break out, guys. I'm pretty sure IoT Samsara today is going to have a breakout day unless earnings and guidance are very poor, which I don't think they will. They are recurring revenue basis. This looks very, very good. So I've put the, so now I'm going to raise the ceiling on this one and move the, there you go. That should be the resistance, the support, multiple touches here at the 29. So if they have a bad report, I can see them going 20 because valuation is rich at 20 times. But for 40% growth, that's not too bad. Look at some of the other companies. They're doing 30%, 20% growth. Look at Palantir, look at Snowflake, that they're doing much lower growth and they have much better valuations. So IoT is still small. You look at it, about $18 billion. Is that right? Yeah, $18 billion, relatively small. So they should announce earnings today. If the earnings, or you never know what the hell happens with these stocks. If it is bad, it goes from 33 down to 29 easily. That's about 10%. Yeah, it's about 10%. If it is really bad, it goes down 20% just because it's a breather. I wouldn't be surprised to go in the 25 range. Wouldn't be surprised, but most likely, I think 70% of the chances are it's going to go higher to the 36 and most likely to the 40 range, hitting new highs and going from there. Okay, that's oh, let's make sure we do the analysis right, guys. I'm just skipping this over. Very nice bull flag. Just look at this. This is another beautiful bull flag. I'm going to get rid of that. That's not what I wanted. Okay, look at this bull flag. And boom, very nice flag. And then another beautiful bull flag. This is formed very, very well. I like this. I like this a lot. Look at this. Very nice flag. On the weekly chart, this is the back moving down. Another flag. Beautiful flag. This is very well primed up. If they don't mess it up today with their earnings, I don't think they will. This is primed to go into the 40 range. Listen, IoT overall, Samsara is a very good space to be in. Very few companies operate in this space. They have competition, but not in a significant way. Most of the competitors are fairly small. So keep that in mind. And this is a very, very good growth stock. Okay, so you look at it overall on the daily chart, consolidating. This, in one way, you could say this is a flag. Look at that. This is a move up and then consolidation. On another way, this is just a consolidation period. So I'm going to move this out over here and show you the consolidation. This is just the stock on the daily chart, just screwing around, wasting its time, going up and down and sideways, but after a nice flag. So it's poised, it wants up, and it's come to its 21-day moving average, tested the 21-day moving average quite a few times. This was a great point in October 23 when it came down to 21, probably to move into it. But in any event, if it does do badly in earnings, which I don't think, but let's assume it does. You can never know. I don't have any information. It goes down to 28 easy, 27, 28 easy. But realistically, I think where you should expect this to go is breach the 36 and most likely get to the 40 range, depending on earnings. How has it performed on previous earnings? Look at that. Very nice flag, just consolidated. The earnings before that, very nice bull flag, actually moved down and then moved up back again. Very nice. Before earnings after that, very nice bull flag. Yeah, and then moves up again. So this has a pattern of, okay, after earnings, creates a nice flag, moves a little bit lower and touches almost tries to fill the gap, but it didn't fill that gap. It's never filled that gap, never filled the gap from 3 quarters ago, and then starts to move back again. Look at this nice bull flag, moves it down. That's what it does. What it does is, if you look at the personality of the stock, moves up, consolidates down, and then makes a big move. Consolidates down, then makes a big move. So this is just consolidation period. I would expect again, big move up, consolidation down, and then move back up again. That should typically be where the stock ends up. But this is a nice consolidation period, screwing around between 36 on the high end and 31. So 15% move here is very easily expected on the stock. Let's look at the moving averages. Moving averages are fairly decent, so it's not yet anywhere close to the 200-day moving average. The RSI seems to indicate it's okay. It's not great. The MACD is literally flat, so there's no momentum in the stock right now, so to speak. So the earnings will be likely a very good catalyst for this. Thank you very much for watching. Let me know what you think. I like Samsara.